In truth, we have, when I say we, I mean humankind, has underinvested in the productive capacity around raw materials for 30 years. And that underinvestment's coming home to roost. The average mine grade of a copper mine in 30 years has fallen from 1.5% to 0.5%, fallen by 2/3. Supply shortages loom no matter what we do.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. Today we have a fantastic discussion lined up, and we're fortunate to have with us Rick Rule. Rick is the president and CEO of Rule Investment Media and Battle Bank. He was the founder of Sprott US Holdings and held the CEO position for 10 years. Rick is the founder of the Rule Symposium held annually in Boca Raton, Florida. I had the privilege to attend this year. It was an absolute blessing, and anyone who is invested or interested in the gold, silver, and metal space needs to either attend in person or virtually. It is a must because of the networking, the learning, the education, and the access that you gain by participating. So well done. Rick, thank you for returning to Metals and Miners and for joining us today.
Well, thank you for your support of and attendance at the Boca Raton conference. It was great seeing you down there.
Yeah, it was wonderful. Okay, well, let's start with the Fed. Fed Chair Powell, in his last press conference, admitted that the economy is performing remarkably well, yet for the second straight time in 2 months, he lowered the federal funds rate. He also implied that the related risks are worth taking, including potentially overheating a strong economy, untethering inflation, and inciting a stock market meltup. For a Fed chief promising to deliver more rate cuts, Powell seemed remarkably optimistic on the economy. In your analysis, why is he lowering rates and risking all of that if the economy is doing so well?
I think at the top of the Fed, they're very political. I deal with some lower ranking people at the Fed, much lower than he. And the institutional bias at the Fed, at least among the employees, was not to lower interest rates. They, I think, have their finger on the pulse of the economy, which is to say that the economy is remarkably strong, given the punches that it's had to endure. But the economy, which everyone notes is very uneven, those of us with access to credit and the knowledge as to how to use it are doing extraordinarily well in this economy. But half the country doesn't meet that description. The economy is also, I think it's fair to say, over-leveraged. And lower interest rates serve their interests. And that's from the top of the economy on down. The on-balance sheet liabilities of the U.S. government exceed $35 trillion. They're soon to exceed $36 trillion. And you get to the point where interest rates become a very large line item of that. And that cascades through the economy. Perhaps not to old wise guys like myself, who have attended liquidity squeezes before and don't want to do it again. But I think, frankly, that artificially low interest rates are, while harmful, extremely popular in the economy. Artificially low interest rates subsidize spenders at the expense of savers. And there are more spenders than there are savers. In a democracy, you can imagine the way that works itself out. Mm-hmm. Reminds me of the old joke about 3 coyotes and a lamb voting on what was for lunch.
Too funny. Rick, Jay Powell, let's stay there, reminded us again last week that once purchasing power is lost, it's lost forever. In response to a question at the press conference about the Fed's pre-pandemic policy shift to inflation symmetry, where they would allow a period of above 2% inflation to make up for the period below 2%, Powell said they will not tolerate now a period of below trend inflation in order to catch up to the very high level over the past few years. That would, of course, give relief to consumers, right? But he just wants the inflation rate to change to stop at 2% at this part of the cycle. In your opinion, why are they okay with the purchasing power loss and sustained higher price thresholds?
Gary, I think the whole discussion is fraudulent. His definition of inflation is measured by the CPI. And I think that any rational observer would refer to the CPI as the CPI. When he talks about the current rate of inflation as measured by the CPI at 2.6%, he can only be referring to a basket of goods and services that neither you nor I buy. All an intelligent citizen has to do is think about the deterioration of their own purchasing power for the basket of goods and services that they buy. Pick a period. Let's try 2020 to today. Where are gas prices compared to 2020? How about grocery prices? How about medical care costs and medical insurance? How about rents and mortgage payments? The idea that my definition of inflation, which is the deterioration of the purchasing power of my savings or my salary, relative to the basket of goods and services that I consume, doesn't resemble the CPI. Where they say 2.6, I say 7.5. I would suggest that that entire discussion is window dressing to justify the maintenance of the economy that exists today that works for the people in power as opposed to for everyone else.
So the incoming Trump administration and Congress are focused on trying to cut the U.S. budget. By how much is anyone's guess. Do you believe, with all the talk and all the rhetoric and the narrative, it'll be enough to meaningfully change the trajectory of the debt and debt servicing impacts to the budget anytime soon?
No. I'm old enough to remember the Reagan Revolution, which was going to cut government, except that it didn't. People describe me as a cynic. I would ask them to read a book called The Triumph of Politics by David Stockman. David Stockman was the head of Reagan's Office of Management Budget during that point in time. By the way, his training for that job was as a divinity student. And as he pointed out, that was appropriate. He had to pray a lot. Politics, Democrat or Republican, is transactional. You get ahead because you promise to protect your constituency from other people's theft and steal from other people's constituencies to fund your own. I like to joke that you can understand the process of politics by looking at the root words. Poly from the Greek for many, tick from the English colloquial for small, blood-sucking insect. Mr. Trump will not cut expenditures. He will expand expenditures. His presidency was transactional. His promises were, like Ms. Harris' promises, ill-described bribes. He proposed to bribe you with your own money, and he will keep that promise.
So, Rick, Trump wants a manufacturing boom. The military complex wants a manufacturing boom. They can't fight a war with China since China makes all of their critical military components right now. It looks assured that we'll get some kind of manufacturing boom, or at least an attempt. That said, isn't that another inflationary indicator?
Yes, of course. When you buy from a politically favored supplier, as opposed to an economically efficient supplier, of course. Now, in truth, we are, in terms of technology and inbound investments, more important to China than they care to admit to. Mercifully, I would suggest that the world is more interconnected. It would be lovely if we focused on those aspects of our lives where we need each other, as opposed to those aspects of our lives which would cause us to shoot each other.
Right.
And I hope that mutual interdependence continues. My hopes, of course, don't make a market. And I think the incentives to transplant some of the industrial base from efficient countries back to an inefficient country will be very high. I remember visiting Shanghai some years ago and meeting with the senior aide to the mayor of Shanghai. And we were talking about a major capital project. And I said, talk to me about permitting. He said, approved on Thursday, started on Monday. Can you imagine trying to permit a major aerospace plant, as an example, in the United States? I know one copper mine in the United States, Resolution, wonderful copper mine, over 1 billion tons of reserves, 1.5% copper, so 3 times the average mine grade worldwide. In Arizona, a copper mining state, next to a copper mine, guess what? 26 years in permitting. In China, that might be damn near mined out.
That's incredible. Are you expecting, in the name of basically nationalism, more protectionism over commodities in the years to come?
Absolutely. Yeah, I mean, absolutely. It's a little wild, you know, Gary. I remember 5 years ago being a uranium investor. I was roundly vilified, you know, despised, hated. It's very odd how politics has changed. Now I'm a hero to be subsidized, when before I was an ogre to be jailed. You know, in truth, we have, when I say we, I mean humankind, has underinvested in the productive capacity around raw materials for 30 years. And that underinvestment's coming home to roost. The average mine grade of a copper mine in 30 years has fallen from 1.5% to 0.5%, fallen by 2/3. Supply shortages loom no matter what we do. And there are now geopolitical concerns. The Chinese are doing now what we did in the 50s or 60s, securing their supply chain worldwide. The Japanese are doing the same, and so are we. So absolutely, these geopolitical considerations around natural resources will be important considerations. Yes, we'll be schizophrenic in the United States, which is to say we'll have all kinds of permitting and political discussions at the same time that we waste billions of dollars in subsidies. It would be a grand comedy were I watching it from somewhere else on a broad screen TV.
So you've been in the markets for more than 5 decades. In your analysis, let's focus on the stock market for a moment. Is the stock market early cycle like 1995, late cycle like 1999, or more like the roaring 1920s, like after World War I and before the start of the Great Depression?
You talking about the broad market?
Yeah.
Yeah. I mean, let me say, first of all, that whatever I say is going to be conjecture. I know a lot about valuations in resources and in conventional financial services, but I don't know much about valuations, how to establish them through most of the companies that make up the equities market. Given the increasing bullishness about investors and their increasing attractiveness to themes, as is evidenced by ETFs, my suggestion is that we're probably in the mid-60s, the Nifty 50 era. What you see is a market galloping ahead, but market breadth is extremely narrow. In the 60s, you saw the rise of passive investments, but through active mutual funds, which is to say, increasingly investors consigned responsibility for their portfolios to, quote, professionals. You're seeing the same thing now with passive investing in ETFs. So if I had to correlate the broad equities market, however improperly, because I can't ascertain value in most market areas, I'd have to say it feels to me most like the historical descriptions that I've read of the mid-60s.
So, Rick, some analysts are saying that Trump's victory will likely further strengthen the BRICS economic and trade bloc plans, which aim to counterbalance his protectionism and economic nationalism policies and any resulting Chinese pullback, and that global de-dollarization is just the natural path forward. Do you see it the same way?
I do. I mean, I think the difference between Trump and Harris is Tweedledum and Tweedledummer, and I think they're interchangeable. The BRICS as a solution, to understand the BRICS as a solution, you need to focus on what the problems are. The first I would suggest has been the United States' decision to weaponize the dollar, to use control of the world's reserve currency, our exorbitant privilege, to further U.S. economic and political policy around the world, rather than being a neutral arbiter of the medium of exchange. We've weaponized it. The second thing that we did is, irrespective of how you feel about the Russians' move into the Ukraine, we stole $300 billion in Russian-owned U.S. treasuries. Now, if you are the administration of a country that occasionally has policy disputes with the United States, any one of 140, how would you feel about the weaponization, the extraterritorial imposition of American power through the dollar? And how would you feel in particular about the fact that you loan the Americans $300 billion and they steal the note? I would suggest to you that the answer is not very good. The second problem, Gary, is maybe more important than the first, which is to say that the U.S. Treasury is a lousy deal. People don't understand that. But if you're like me, a credit guy, you look at the solvency of the borrower. The issuer of the currency is really a borrower. Let's look at the U.S. Treasury. First of all, on balance sheet, we have $35 trillion in net debt, soon to be 36. For the record, that's a big number. But the number gets much scarier because the off-balance sheet liabilities of the U.S. government, the promises that we've made each other, on a net present value basis, not a nominal basis, exceed $100 trillion. Now, the on-balance sheet number increases by a documented $2 to $2.5 trillion a year. Nobody measures the accretion of the net present value of the off-balance sheet liabilities, but they're estimated to be between $2 and $4 trillion a year. So if you look at the estimates, one would suggest that the net debt of the United States is increasing by $5 trillion a year. A year. What is a credit analyst to do? We have a borrower that is actually in some difficulty. And you know, I hate to go with numbers because this will bore the hell out of your audience, but I'm going to do it anyway because I have to make my point. The IRS suggests that the aggregate net present wealth of Americans, the amount of money that Americans are worth, is about $140 trillion. That's an interesting number if collectively we owe 130. Truly scary number. Now let's get worse. That goes to the financial condition of the borrower. Let's talk about the business proposition. When the CPI suggests that the rate of deterioration of the purchasing power of the US dollar is at 2.6%, I would argue that the basket of goods and services that you buy, by the way, they include tax, which the CPI doesn't, is more like 7.5%. Again, look at the price of groceries, look at the price of gas, look at the price of home insurance, look at the price of rents or mortgages. I think it's more like 7.5 than 2.6. If you are a foreigner and you buy a U.S. 10-year Treasury, hell, if you're an American, you buy a 10-year U.S. Treasury, they pay you 3.5, something like, pardon me, 4.5, something like that, in a currency where the purchasing power is declining by 7.5. In other words, you lend the U.S. government money for 10 years, and they promise, absolutely promise, to reduce your purchasing power by 3% a year compounded for 10 years. The first promise in my lifetime made to me by my government that I absolutely believe they'll keep, and it's not a good one. That's what the BRICS are referring to. That's what the BRICS are responding to.
Well, so it's an interesting, your math kind of matches up with the growth of debt versus the growth of GDP. It's about 3.5 to 1 debt to GDP since Reagan came into office in 1981.
Right.
So, this problem, the question is that sustainable? Debt growth of 3.5 to GDP growth of 1, is that sustainable? But they've kicked the can down the road all these years. Can they keep kicking the can down the road?
I think it was Hemingway, when asked how you go bankrupt, he said slowly at first, and then all of a sudden. I think it's partly a function of confidence. We have lived through probably the most benign 40 years of economic history in the period 1982 to 2022. And confidence is still fairly high. Solvency is an interesting question. If somebody owes $1 million and they have assets of $500,000, but they have $12,000 in their jeans, right now they can afford a cup of coffee. You follow where I'm going with this. The Japanese have struggled with what we're struggling with for 30 years. What they basically have done is cannibalized the capital of private Japanese over 30 years. How much private capital does America have to cannibalize? We have a huge advantage that the Japanese don't have. We can offload our deficit on others because we print the world's reserve currency. How long can it last? I'm a credit guy. I don't know. It's not a game I'm personally willing to play. I don't own any U.S. 10-year treasuries. I don't own any obligations with dates past 2 years.
So back to the BRICS here, Rick. The BRICS, they're gaining major momentum over the last few years. Many nations have joined. Many nations want to join. I believe the last count was well over 100 nations want to join the BRICS. It seems like it's getting increasingly more difficult for the U.S. to stop the movement. In your estimation, can they?
No, I don't think they can. I don't think it matters much either. I mean, if I was Trump, just for a joke, I'd apply to join. I make all these comments about the U.S. dollar. The truth is that the U.S. dollar is the worst currency in the world, with the sole exception of all the others. Right. Despite our best efforts to wreck our country, there's a lot of ruin left in it. And I think the U.S. dollar will be the world's reserve currency for my lifetime. Mm-hmm. For the record, I'm 71. And here's why. As little as the BRICS countries trust us, they trust each other less. Can you imagine if you were China and Russia wanted to settle their trade debt to you in rubles? Other than vodka, what do you do with them? Mm-hmm. I remember, and I won't name the country, but when I still worked many years ago with Sprott, I had occasion to be attempting to sell Sprott products to sovereign wealth funds in other countries. And I remember dealing with a portfolio manager from a very large sovereign wealth fund and seeing all these U.S. treasuries in their portfolio. And I said, "That's very flattering, sir. You send us all this cool stuff, steel, computers, and we send you pieces of paper with dreams painted on them. I said, do you trust us? No, but we trust you much more than we trust each other. And I think that's the BRICS problem. Uh, unless the BRICS get to the place where they can settle quarterly in gold, uh, what happens with a BRICS currency? To
So
me,
that was
it seems like a euro on steroids. Doug Casey used to say that U.S. dollars, I owe you nothing. The euro is a who owes you nothing. And I guess the BRICS is a nobody owes you anything.
so what's the realistic probability that they're going to get to the point where they are going to net settle in gold?
I don't know. I mean, I really don't know. And I don't know what else they would net settle. Well, here's what they'll do. They'll net settle in U.S. dollars. They won't store U.S. dollars in long-term U.S. treasuries, but the mechanism for liquidity on a global basis will continue, at least for the rest of my lifetime, to be in U.S. dollars.
So then the loser is the treasuries, not the dollar.
I mean, I don't understand how any investor who can add, subtract, multiply, or divide sees making 4.5% in a currency that's losing 7.5% as being arithmetically attractive.
I think it's fair. I think your math is fair. So since the election, gold has taken it on the chin. After gold and silver's almost 50% rise in 2024, there's now a lot of discouragement and frustration taking hold within the precious metals community. I'm sure you've seen and heard it. A pullback, though, Rick, is normal after it gets so stretched past the moving average, like both did prior to this pullback. All major bull markets have corrections along the way, and they often emerge stronger. In your review, is the sentiment unwarranted, and are the long-term drivers for gold still intact?
For people who care about arithmetic as opposed to momentum, this is a no-brainer. And even if you care about momentum, gold's up, I don't know, 40, 45% for the year. So somebody who watches them move from 27 to 26 or whatever it is, they have to say to themselves, is gold up $700 or is it down 100? Probably at my age, you look back a little further because you've been on Earth a while. When people ask me, when's the gold price going to go up? I sort of scratch my head sagely, and then I say, I think it'll go up in 2000. In the year 2000, it was $253 an ounce. Now it's 26 or 27 or whatever. It's generated an 8% compound annual return for 24 years. It's done exactly what I asked it to do. I think the last time you and I talked, we talked about the gold price. And I remember then maybe the gold price was 1900 or something like that. And I remember saying to you, I don't own gold because I think it might go to 2250. I own gold because I'm scared to death it's going to go to 9 or 10,000. I guess it depends on your attitude. But I think if you're going to speculate in something, gold's probably a lousy place to speculate. There's not good enough price volatility in it. I think gold is a wonderful thing to own for insurance, but I think it's a profoundly stupid speculation. I'd much rather speculate, if I was going to, in silver or platinum or palladium or, goofy junior stocks. Gold, to me, it's like life insurance or auto insurance, something like that.
So it's been said, Rick, that the conventional wisdom on a Trump 2.0 administration playbook, it remains tariffs, immigration controls, and tax cuts create a U.S. inflationary boom and a global deflationary bust. And so therefore, it means gold, long U.S. dollar, long U.S. stocks, short U.S. treasuries. Do you agree with that playbook?
There's some of it I don't particularly understand. I think you need to own U.S. dollars for liquidity. I wouldn't own the long bond. Well, I wouldn't own the long bond at all, but I certainly wouldn't own it as a investment. That doesn't mean if they cut interest rates further that the capitalized value of the bond won't for a little while increase. But I have zero interest in holding long-dated U.S. government obligations. And I'm not a gold investor. I own gold for insurance purposes. In terms of U.S. equities, I think you need to pick and choose. And I think you need to pick and choose based on your own knowledge. Money is made over time on the delta between price and value. Price is easy information to get. You look it up online. But you have to have an opinion as to value for that price information to be worth anything. Something is selling for $20 a share. Oh, okay. What good is that knowledge if you don't have an opinion as to what it's worth? So I have problems with the whole premise. I guess the other problem I have is that it's easy for people to feel. It's tough for people to think. Therefore, most people decide to feel. And when they feel, they invest based on narratives. But very often, even if they're right about the narrative will take 5 or 6 years to play out. And their tactic is to try to be in the position for 3 months. If you have a strategy that requires 5 years and you allocate 3 months, your problem is not Trump or Harris. Your problem is conveniently located to the left of your right ear and to the right of your left ear. It's you.
And that explains the sentiment that's happening right now in the space. So, okay, so you probably know Dr. Judy Shelton personally. I've got a question here. Is Trump potentially backing the U.S. into a gold standard of some sort where he will use a gold-backed asset like a 50-year bond held outside the U.S. Treasury that Dr. Judy Shelton has been talking about, basically to entice overseas investment in the U.S.? He's also been speaking to this golden age that he's going to lead the U.S. into. What do you think about this golden age comment, about Dr. Judy Shelton's comments about this 50-year bond backed by something, potentially with gold in it? What do you think is going on there? I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews just like this one that we conduct. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Rick as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video.